Okay, let's unpack this. We're diving deep today into an area where, artificial intelligence meets decentralized finance.
hmm
It's a fascinating intersection, I think, especially as more people are looking for smarter, maybe even automated ways to handle investing.
Yeah, and that complexity is really the core challenge, isn't it? Whether you're in traditional markets or like these dynamic crypto ecosystems, finding the best way to invest, it's tough.
Right.
Takes constant analysis, adaptation, stuff most people just don't have time for. Or the tools, really.
Which brings us right to our topic.
Yeah.
Bittensor Subnet 88.
Uh,
It goes by Staking.
with the Greek tau. Yeah.
Exactly. Linking it to TAO, Bittensor's token. And the developer is listed as mobiusfund.
Right. And we've got a decent pile of source material to sort through here. There's a research report, some details pulled from their GitHub, Bittensor's own docs, market data.
So our mission basically is to dig through all that, figure out what Subnet 88 is actually trying to achieve, what its potential might be, and, the key things you need to know from these sources.
And the sources definitely paint a picture of, well, ambition, serious ambition, starting in Bittensor, sure, but aiming much, much wider.
But like with most big plans.
Yeah, the sources also flag some pretty significant things to keep in mind. Risks, questions.
Okay, so let's start at the beginning. What is this Subnet 88 stalking? What problem is it fundamentally trying to solve?
Okay, so Subnet 88, Stalking from mobiusfund. At its core, it's tackling how hard it is for individuals to find, optimize investment strategies in these complex digital spaces.
Like staking TA.
Exactly. Think about it. Everyone staking TAO might have different aims, max yield, low risk, somewhere in between, different capital, different timelines.
There's no single best way.
Precisely. And figuring out what's optimal for you constantly, that's a lot of work.
So the sources say it's about democratizing access to sophisticated investment strategies. Sounds fancy.
It does, but the goal seems clear. They state they want to extract alpha from these markets, minimize risks, and deliver optimized portfolio returns.
Alpha meaning beating the average.
Basically, yeah. Finding strategies that perform better than just buying and holding, or basic staking, once you account for the risk involved. They want to bring pro-level strategies to everyone.
How does it work inside Bittensor then? How does it do that?
It's set up as this incentive-driven marketplace on the Bittensor network. You've got miners and validators.
Yeah.
Miners are the ones creating and submitting the investment strategies. Validators, they're the ones evaluating those strategies.
Using some kind of scoring algorithm.
Exactly right. Validators use this specific multi-part scoring algorithm built into the subnet to assess the strategies miners submit. The idea is the best strategies, according to the algorithm, get rewarded and bubble up.
Can people actually see these results?
Yeah, the sources mention a key piece for transparency. The stakingalpha.com dashboard that's meant to publicly show the strategy evaluations and rankings.
Okay, so phase one is optimizing TAO staking. But you said the ambition goes way beyond just Bittensor.
Oh, absolutely. Starting with TAOs, staking is like a launch pad. But the stated goal, clearly, is to serve outside retail and institutional investors.
Wow.
They're explicitly targeting the global asset management industry. The sources quote a figure, like $145 trillion market.
So they're using crypto infrastructure now, but the long game is traditional finance.
That's what it looks like. Leverage the crypto ecosystem and its incentives now, but plan to expand way beyond into potentially managing all sorts of assets for a global audience.
That's really important context for you listening if you're grappling with TAO staking decisions or just curious how AI could find better strategies anywhere. Subnet 88 is positioning itself as a potential answer now and later.
Right. So let's peel back the next layer. The tech, that scoring mechanism, how does it all fit together?
Okay, so miners create strategies. They put them in the code, submit them. They can also rebalance, right? Like update their strategy.
Yeah, but doing that isn't free in the simulation. It incurs costs like simulated slippage or fees, reflecting real-world trading. Keeps it grounded.
And the system tries to stop people just copying each other.
It penalizes overly similar strategies, but new miners get a short, 3-day grace period where they won't get kicked out immediately for similarity. Gives them a chance.
They also have a tool, SIMST, for backtesting.
Right. Miners can use SIMS to test against historical data. Important caveat from the sources, though. It lacks block-level precision. Meaning backtest results might not perfectly match live performance. It's a guide, not gospel. Something strategy developers need to be aware of.
Okay, and the validators are running the scoring. Tell us more of this algorithm. What's it looking at?
It's pretty multifaceted. Looks at return, obviously yield percentage, risk, but defined specifically as volatility via maximum drawdown.
The biggest drop from peak to trough.
Exactly. It also factors in how long a strategy's been active. And it pulls in concepts from finance theory, like the Kelly criterion.
For optimal bet sizing?
Right. And the MAR ratio, which is similar to Kalmar, return relative to that max drawdown. P&L calculated daily. And yield includes estimated validator dividends, too.
Standard stuff, mostly. But the sources flagged some metrics as unique to them. But it's where it gets interesting.
Yeah, this is potentially key. They point to two parameters claimed as proprietary to mobiusfund, odds percent and LESAR.
Odds percent.
Seems like it's designed to normalize winning probabilities, using logic from Kelly's equation, trying to quantify the likelihood of profit over time in a specific way.
And LER, what's that one?
LESAR is presented as their alternative to the Sharpe ratio,
Which measures risk-adjusted return.
Right. They claim LESAR is mathematically more robust, but empirically, it correlates highly with Sharpe. They even give a rough conversion, like LESAR Sharpe divided by 11, based on what they've seen.
So odds percent and LESR are their potential secret sauce.
That seems to be the pitch. They position these as differentiators in how they evaluate strategies. Of course, proprietary also means less transparent than standard metrics.
Makes sense. What about keeping strategies fresh?
They have something called dynamic emission control, or DEC. Basically, it penalizes stale strategies. If a miner hasn't updated or rebalanced in a while, their score gets dinged.
Incentivizing active management.
Exactly. Keep things responsive.
And there are other tweaks, too, based on strategy age.
Yes. The scoring apparently includes empirical adjustments for really short-term strategies under 30 days, and also tweaks to the MA ratio calc. The sources suggest this shows the model is adaptive, being tuned based on real performance in a fast market.
Okay, so the overall design philosophy seems to favor long-term thinking, portfolio management, not just quick trades.
Seems that way.
So for you listening, the takeaway is, the engine here is complex, partly proprietary scoring. If odds percent and LBIS really work and find better strategies consistently, that could be a real edge. But
its effectiveness, its resistance to being gamed, that needs proving over time with real results. And the fact they're making empirical adjustments shows it's still evolving. It's not a finished, perfect system.
Definitely. Now, shifting gears, security. This came up strongly in the sources. What's the situation with audits?
This is a big one. The sources are blunt. There is zero mention in the documents provided of any independent security audits done specifically for Subnet 88's code.
Okay, wait. Zero mention.
Zero mention.
That's significant, given what it does.
Hugely significant. This subnet handles financial logic. It influences how TAO emissions are distributed based on strategy scores, and the roadmap includes an AUM app that would handle user funds directly.
So a bug wouldn't just be a glitch. It could mean real money lost.
Absolutely. And this really stands out compared to standard practice in DeFi. Independent audits, they're critical, they're expected, especially if you're aiming for institutional money like they say they are. It's about trust, verifying the code.
So for you, the listener, this isn't some minor detail. Financial apps need rock-solid security and trust. The ELSs clearly point to the lack of a documented independent audit as a major red flag, seriously bumping up the risk profile here.
Right. Moving on then, let's talk competition. Who else is playing in this sandbox?
Well, initially, they're in this niche of Bittensor staking optimization. Maybe not super crowded yet,
right,
but that $145 trillion global asset management ambition, that throws them into a completely different league. DeFi, AI, and TradFi. That's a busy intersection.
And making that leap, it's massive. Going into U.S. stocks, global assets, you're up against huge established players, banks, funds with deep pockets, trust, and decades of navigating regulations.
Yeah, the regulatory side alone is a monster compared to just crypto.
Totally different world.
The sources used Porter's 5 forces, that business analysis framework. What did that analysis suggest?
Basically, it paints a tough picture. Threat of new entrants. Moderate to high making subnets isn't impossible. Fintech software barriers aren't sky-high. Supplier power. Moderate to high depends on Bittensor, and traditional financial data is expensive.
Buyer power. Users.
High. Loads of alternatives out there. Staking platforms, DeFi aggregators, robo-advisors, trading bots. Switching costs are low.
Threaded substitutes.
And extremely high. Just a massive range of existing ways to invest or get strategies.
And rivalry.
Moderate to high within Bittensor, probably growing, but extremely high in the wider AUM and fintech space they're targeting.
Did the sources name any specific competitors?
Yeah, within Bittensor, they mentioned Synth Subnet for price prediction data and Subnet 10 Sturdy for DeFi yield farming. So other financial subnets, but different angles.
And outside Bittensor.
Examples like Lido for staking, but Lido is about core staking, not this strategy marketplace idea. You're in finance for yield optimization, but that's more auto aggregation, not miners competing with AI-vetted strategies. And platforms like 3 Commas for trading bots, but there, the user sets up the bot versus Subnet88 aiming to provide the vetted strategies.
Okay, so understanding the landscape is crucial. It really makes you ask. Is Subnet 88's specific approach, this decentralized AI strategy market, truly different and valuable enough to stand out from everything else already available?
Which leads us to their unique value proposition, or UVP. What do they claim makes them special?
Their pitch seems to be a decentralized, transparent, AI-refined source for investment strategies, aiming for better risk-adjusted returns. The key bets are that stakingalpha.com transparency and the proprietary scoring we talked about.
And when the sources analyzed this, how sustainable did that UVP look?
Well, take the proprietary scoring. It's potentially valuable, maybe unique right now, but the code is open source.
So others could potentially copy the logic.
Right. The edge might be more in the ongoing know-how, the data generated by the network over time. Harder to replicate that. So maybe a temporary edge, possibly sustainable if they keep innovating fast.
What about the big vision, the DAI-AUM?
Valuable as a goal, sure. But lots of projects have big visions. The advantage only comes from actually executing it better than anyone else.
Which is the hard part. And the dashboard.
Stakingalpha.com. Good for trust, but technically building a dashboard isn't a huge moat. Competitors could do that.
So where's the real potential for a lasting advantage?
The sources point strongly towards network effects.
The flywheel.
Exactly. If they can get enough good miners submitting diverse strategies, enough sharp validators evaluating them well, and enough users trusting and using the system,
then it creates this virtuous cycle. More users attract better miners, validators, better strategies attract more users, better validation improves quality. It feeds itself.
And that kind of ecosystem becomes really hard for newcomers to break into.
So the conclusion on their edge seems to be, the most defensible advantage hinges on successfully building strong network effects, powered by a scoring algorithm that genuinely works and keeps getting better. But the open nature means execution has to be top-notch to stay ahead of potential copycats.
Okay, let's talk business model. How does this project plan to create value and, importantly, capture some of it? Make money.
Well, the key partner foundationally is Bittensor itself. The network provides the rails and the initial TAO incentives. Looking ahead, they'd need partners for financial data feeds, maybe brokers or custodians.
Activities are building the tech, running the dashboard, and crucially, incentivizing miners and validators to participate. And building that front-end AUM app is a big one.
Key resources, the code, especially the scoring logic, the community miners, validators, the dashboard itself, and importantly, the TAO emissions the subnet earns.
Value prop for participants seems clear. Miners and the validators earn TAO for their work.
Right, and for end users, access to these supposedly optimized AI-vetted strategies via the dashboard and future app, aiming for better returns, managed risk.
Customer segments start with Bittensor folks interested in staking, but the roadmap targets retail and institutional investors, crypto and traditional.
Big jump. Channels are stakingalpha.com, the future app, community hubs like Discord X, and just visibility within Bittensor. Costs, development, maintenance, community support, and potentially very high costs for financial data licenses later on.
Which brings us to revenue. How does it actually plan to make money long term?
Okay, right now, the main economic driver is the TAO emissions the subnet gets from the Bittensor network. That's what pays the miners and validators, bootstraps the system.
But that might not last forever or might change.
Exactly. So the sources emphasize the long-term plan for direct revenue relies heavily on that future AUM application. That's where they could charge fees.
Like what kind of fees?
Management fees on assets, performance fees on profits, maybe subscription fees for premium access, standard asset management stuff, basically.
So the project's long-term financial health looks really dependent on launching that AUM app successfully and getting people to pay for it, especially if TAO emissions fluctuate.
That seems to be the core calculation, yes. And the whole model is designed to try and spin up those network effects we mentioned, get more users, attract better strategies, improve quality, attract more users, with the scoring algorithm quality being the linchpin holding it all together.
Let's zoom out again, the broader environment. What external pestle factors did the sources highlight as particularly relevant?
The big ones, especially given the roadmap, are definitely political and legal. AI regulation is evolving everywhere. Crypto rules are a patchwork.
But the real kicker is when they talk about Phase 2 onwards, U.S. stocks, global assets.
Precisely. That's stepping directly into heavily regulated financial markets. We're talking securities laws, potential licensing requirements as an investment advisor or manager, complex anti-money laundering, AML, know your customer KYC rules, enforced by bodies like the SEC.
It's a massive regulatory burden, way beyond what most crypto projects deal with.
Absolutely. It's a huge potential barrier.
What else from the external environment?
Economic factors, obviously market conditions affect strategy performance, and the TAO price itself is vital for incentives. Social factors matter, public trust in AI for finance, adoption of decentralized tech, and the sources implicitly raise that question around the by the community claim. Is governance truly decentralized, or is mobiusfund still holding the reins? Technologically, they need to keep up with AI and blockchain changes, plus they depend on Bittensor itself.
So for you listening, these external forces, particularly regulation for traditional assets, aren't abstract. They're concrete hurdles that could seriously impact whether that grand vision is even achievable.
Now, something the sources flagged as a major concern, the team and governance transparency, or rather, the lack of it.
Right. This is a big red flag in the analysis. The sources state there's a significant lack of clarity about who the core mobiusfund team actually is. Their specific expertise, their track record, especially in AI and managing assets at scale. It's not detailed.
They mention an email, jake@mobius.fund, linked to a different repo under the same GitHub org, but nothing concrete about the SN88 team itself.
Correct. No specific names, bios, or verifiable experience cited for the staking project team in the documents provided.
And that's critical, isn't it? Trust in finance is fundamental. You need to know who's managing the money, or in this case, designing the system that evaluates strategies influencing money. An anonymous or pseudonymous team. That adds significant risk, especially with ambitions to enter the TradFi space.
Distinguishing them from other groups called Mobius helps avoid confusion, but doesn't solve the core anonymity problem.
Did the sources mention any advisors or notable backers?
No, none listed in the material we reviewed.
Yeah.
And on governance.
Well, the operational layer seems decentralized, miners and validators doing their thing. But the sources suggest mobiusfund likely controls key initial parameters, the GitHub repo, the core direction.
So the by the community claim needs more digging.
Yeah, to be truly decentralized governance, you'd want to see evidence of the community having real input on major decisions like algorithm updates, roadmap changes. Otherwise, it's operationally decentralized, but potentially centrally governed.
So key questions for you, the listener. Who are these people? What have they actually done before in asset management? How are big decisions made? The sources suggest there aren't clear answers right now, which is a significant reason for caution.
Okay, let's look at activity. How can we gauge if this thing is actually getting traction? What metrics matter?
We'd need to look at explorers, dashboards like StakingAlpha.com. Key things the sources mention are active miners, active validators, total TAO staked in Subnet 88 specifically, and also market data for their token, the SN88 alpha token.
Like trading volume, market cap.
Exactly. The sources gave some snapshot figures, like around 460Ks on and 24 Archer volume, and a market cap around $1.50 mentors for the SN88 token at the time of the report.
What do numbers like that tell us at this stage?
They tell us it's live, it's operational, the token is being traded, it's attracted some capital and attention within the ecosystem, it exists and has visibility.
But it's just a snapshot.
Right. You need to track these metrics over time, compare them to other subnets, other platforms, to really understand the trajectory. Is it growing? Stagnating?
And the ultimate performance metric really is the actual results.
Absolutely. The risk-adjusted returns of the strategy shown on StakingAlpha.com over a decent period. That's the core value proposition test.
So yeah, those operational numbers plus the actual strategy performance data from their dashboard, that's how you'd start to see if it's gaining traction and if the core idea is actually delivering.
Looking ahead then, the roadmap. What's the plan and what's the potential?
It's definitely ambitious, laid out in phases. Phase 1, Bittensor Staking, is live. Phase 2, aiming for 3 to 6 months, U.S. stocks. Phase 3, 6-12 months, global multi-class assets. Phase 4, a year plus out, is the big goal. Full DAI AUM.
And they're building that front-end AUM app in parallel.
Yes, that development is ongoing alongside the back-end phases.
Okay, clear vision, ambitious timeline. How feasible does it seem based on the analysis?
Well, phase 1 is done. That's real. But phases 2,
No.
3, 4. Each step ramps up the technical complexity, the regulatory nightmare we discussed, and the competitive intensity.
Yep.
Hugely.
So feasibility really hinges on a team's ability to execute.
Entirely. And given the transparency questions around the team's experience for these later stages, well, it's currently unverified if they can pull off these much harder phases.
Developing the front-end app seems smart, though. Makes it accessible.
Oh, definitely. Good strategy. Tackles the user experience barrier many decentralized projects face. Shows they're thinking about reaching beyond the crypto-native crowd.
So what are the key things we need to see happen? The milestones that would signal progress and maybe start to de-risk this. The sources call these conditions for change.
Right. These are the critical checkpoints. Number 1, the mobiusfund team needs to provide clarity. Who are they? What's their relevant background in finance and AI?
Makes sense. Number 2,
Independent security audits. Completed, published, verifiable. For the actual SN88 codebase. Non-negotiable, really.
it's hard.
Consistent, strong, verifiable performance shown on stakingalpha.com over a meaningful time frame. Proof the strategies work.
4th,
That front-end AUM app needs to launch successfully and actually get users. Show adoption beyond the core Bittensor community.
and 5th.
Tangible progress navigating the regulatory maze for traditional assets. Show they can actually operate legally in those markets. Licenses, compliance, whatever it takes.
Got it. So for you listening, track these milestones. Until these fundamental points are addressed and demonstrated, those later roadmap phases and the project's ultimate success remain highly speculative.
Okay, let's try and wrap this up. Pulling together everything from the sources, what's the final picture of SN88 Stalking?
It definitely presents a compelling idea. This blend of decentralized AI, asset management, the potential for network effects, maybe a unique scoring method. It's tackling a real challenge.
What?
But
Oh.
yeah, based on the source material we have, that vision is seriously weighed down by major concerns. Top of the list, the anonymity and unverified expertise of the core team and the lack of a documented independent security audit.
Those are fundamental issues in finance.
Absolutely. Which puts this project firmly in the very high risk, potentially high reward bucket. The reward, if they somehow pull off this monumental task. The risk, stemming directly from those transparency and security gaps, plus the huge competitive and regulatory mountains they need to climb.
So the conclusion from the source analysis was pretty stark.
Yeah, it was described as highly speculative right now. Unfavorable for anyone risk-averse. Suitable only if you have an extremely high risk tolerance and are using capital you can genuinely afford to lose entirely.
Which leaves us with a final thought, maybe, for the listener to chew on.
Go for it.
This whole ambition, building a DAI-powered AUM on a decentralized network, targeting that $145 trillion global market, it forces a big question, doesn't it?
Which is?
Can a truly decentralized system, even with smart AI, realistically build the kind of trust, regulatory compliance, and operational robustness needed to go head-to-head with established finance giants? What would it really take to bridge that gap between DeFi and TradFi successfully at that massive scale?
That's a heavy question. Definitely something to think about.
And if you are intrigued and want to dig deeper yourself, the sources point a few ways. You can check out stakingalpha.com, see the dashboard data, use Bittensor explorers like taustats.io or bittensor.com scan to look at subnet activity.
You can even brave the code on GitHub under mobiusfund staking if you're technically inclined. See that scoring logic firsthand.
Right. And check market data sites like FX Empire or CoinStats for the SN88 token price and volume, see how the market's treating it. Lots to potentially track if you find this space interesting.